Hi guys, and welcome to our podcast. Today we are going to discuss about the best ways to get your credit score. Getting your credit report nowadays has become easier than it was a decade ago. There are a few ways by which you can get your score. These include the credit cards and even some other loan statements. There has been a boom in the number of credit card providers who are providing reports to customers. Moreover, you can also see the reports online without costing anything. Your credit report information includes your address, the number of the credit accounts you have, and loan repayments. It is important because it will also indicate whether you've been sued for bankruptcy. Once a year, the federal law has made it possible for you to view your reports free. Basically, you can get your reports from any of the following: Experian, Equifax, and TransUnion. These can all be accessed from the annualcreditreport.com. 90% of all people who are concerned with their credit reports will get them online. The credit scores are mainly calculated on the basis of information obtained from the credit reports. The importance of being with this is that lending companies will look at the score. If the credit score is that important, how do you get your score? The first and the most common one is FICO. If you want to know how well you are performing financially, credit cards will do all the magic. As the statistics indicate, 50 million plus of the American population are using FICO to get their credit card statement. According to FICO, the number of the consumers scoring in super prime range is rising, usually 800 plus. By April 2016, more than 20% of Americans were in this range. Ever since FICO began tracking the reports, back in 2005, this was the highest rise. The most widely used score ranges from 350 to 800. If you are having a report indicating less than 350, say 200, then this has a negative effect. If your report indicates something above 800, then you have better odds to get a loan or any other service. Therefore, on the FICO, the higher the number, the better. If your report on the FICO scale indicates a number above 750, you are likely to qualify for the best rates. Now, if your score is below 700, say 650, then you are likely to pay higher interest on your loans. Chances of getting the loan with lower scores are low. If you are lucky to qualify for one, then be prepared for very high interest rates on the loan. So how to use FICO in order to find your credit score? The importance of making sure that your credit score stays in a good mix is really simple. Imagine having a score of 659. With this, you could qualify to get a loan slightly at 5.3%. Lower than that, a person having a score of 680 would qualify for the same loan at 4.7%. Even lower than that, having a score of 700 would make you qualify for the same loan with around 4.2%. Therefore, the higher the rate, the better the interest rates. With the score being 659, that would be about $950 in a year less in interest. If you spread this across the lifespan of the loan, that would amount to $28,500. Calculation of the score and the interest rates is well spread across a number of factors. For example, if you wanted to get a loan, certain elements have to be put in way. First, 35% of the final rate will have to come from your payment history. Another aspect they will consider is the amount you owe. Again, that makes up 30% of the rate. 10% comes from the types of credits you use. If you apply for a new credit, that will account for 10%. And finally, 15% comes from the length of history. Do not feel intimidated by the figures you see. Different lenders will use different scores. However, FICO score is widely used. CreditKarma.com, a new site offering a different score. After getting the score with the FICO, you could try and compare it with what is in Credit Karma. This site uses a score slightly different from the FICO score. Therefore, it is good to keep on a track of your credit reporting. From one month to another, the score will be fluctuating. This again will depend on your everyday spending. The second option is via financial institutions. If you are not comfortable with FICO or Credit Karma, or any other online companies, perhaps your financial institution can help you. This hasn't been so well advanced compared to the online platform. Most financial institutions started giving out scores not long ago. This was initiated by Barclays and Discover. More and more banks are joining the move. From the statistics, financial institutions only account for 20% of the general population who will use them to get their score. The third option is via credit bureaus. Majorly, there are 3 credit bureaus. These are TransUnion, Experian, and Equifax. Through their websites, you can purchase a complete credit report. However, before getting access to your credit score, you will need to answer a few basic questions. 90% of the makeup questions, you already have the answer. In addition, you will need to provide personal identification information. This is important, getting your credit report alongside your score. 80% of the people are able to identify errors in their reports through getting credit card reports. You need to understand that errors in your report may affect your score. Within 12 months, 44% of adults have not received their score. You need to be concerned with every report concerning your credit card. Another great option is via credit monitoring services. These are companies that allow individuals to monitor their credit reports with a 99.9% inaccuracy. This will, however, depend on the company you choose. Some are very efficient, while some others are not. However, for best results, you will be required to pay up a monthly fee. 40% or less are the people who have fallen victim to credit card theft. If you are susceptible, then you need credit card monitoring service. Through each credit bureau, you can find a credit monitoring service. This will help you to track down the performance in your credit reports and also help you to find your credit score. MyFICO.com is one of the credit monitoring services that you can use to your advantage. Back in 2014, there were 12.7 million victims of identity theft. With the Credit Monitoring Service Company, you can be sure to get the best protection ever. 95% of all the cases involving the credit cards have been solved prior to using a credit monitoring service. It is important that you get some daily alerts in case something goes wrong. In addition to that, get protection against stolen or lost property. The last option is your annual free credit reports. If you go to annualcreditreport.com, you will get everything about your credit score. You can view your score once per year. What makes it exceptional is their Fair Credit Reporting Act. It is the right of every person to be entitled to a free credit report once in every year. You can request for a report by contacting your bureau. However, more importantly, the bureau will not give you a free credit report. If you need be, you need to contact them for your credit score. To get the free annual credit reports, you will need to visit the site aforementioned. Once there, prepare yourself for mind-blowing questions. As a matter of fact, 99.99% of the questions are trick questions. 4 out of 10 of most people will fail in securing the right answer. 60% of the credit scores are erroneous. Credit reports may contain errors, and this negatively affects your credit score. 2 out of 8 cases of credit reports may contain someone else's reports and transactions, and this may affect your score. In a nutshell, it is important getting your score. Alongside with that, it would really help a lot if you settle down to finding your report and reviewing it. That's it for now. I hope you enjoyed it. Don't forget to subscribe to our podcast channel on YouTube. In addition, if you have another great source to find your credit score, share them on the comments below.